Picture this. It is the second Wednesday of January 2026. Margaret, who is 72 years old, walks into her kitchen carrying her morning coffee. She settles into her chair, opens her banking app on her phone, and waits patiently for that familiar figure to load, her monthly Social Security payment. She had been looking forward to this moment for weeks. Every news outlet had announced that retirees would be receiving a 2.8% benefit increase. She had already mapped out exactly where those extra dollars would help. Maybe a little extra for groceries, perhaps a small gift for her grandson's upcoming birthday. But the moment the new deposit appears on her screen, her stomach drops. The raise has almost vanished. The new amount is only a handful of dollars above what she received in December. She quietly murmurs to herself, "Where did my COLA actually go?" My friend, if you are sitting here watching this video, you may be about to experience the very same surprise that caught Margaret off guard. And what happened to her is currently happening to millions of other retirees all across this country. Please stay with me. What I am about to walk you through could potentially help you save hundreds, possibly even thousands of dollars over the next 12 months. I am Edward, a senior policy analyst. For many years now, I have been helping retirees just like yourself make sense of the complicated rules that lawmakers in Washington rarely take the time to explain in everyday language. And today, I am going to guide you through, point by point, precisely what Medicare did to your Social Security increase starting in January 2026, how this situation developed, and which official forms and legal rights you can actually use to push back and safeguard every single dollar you have rightfully earned. Every piece of information I am sharing with you today comes directly from the Social Security Administration, Medicare.gov, AARP, and the Kaiser Family Foundation. No gossip, no partisan talk, just confirmed, documented facts. But please, stick with me all the way to the end, because there is one overlooked mistake that the majority of retirees are quietly making at this very moment. A mistake that could potentially cost you up to $8,000 within this year alone, and nobody from the Social Security office is going to phone you up and give you a heads up about it. Let me begin by sharing the story of Robert. Robert is a gentleman of 67 years. He stepped away from his career in late 2024, retiring from his role as a manufacturing supervisor in Ohio after dedicating 42 years to that profession. A decent man, a thoughtful man, the sort of person who carefully reads every single piece of mail the government sends his way. Back in 2024, Robert took a step he genuinely believed was wise. His financial advisor had suggested converting a portion of his older 401k account into a Roth IRA, allowing his savings to grow without future taxes for the remainder of his life. So Robert moved $95,000 in one single calendar year. He paid every dollar of tax that was owed. He completed every required form. He genuinely believed he had handled everything correctly. Then, in the final months of 2025, an envelope arrived in his mailbox from the Social Security Administration. The notice stated that his Medicare Part B premium for the upcoming year would not be the regular $202.90 per month. Instead, due to his 2024 income figures, he was being assigned to an IRMAA category, and his updated premium would exceed $400 each month, plus an additional surcharge attached to his Part D prescription coverage. Robert was speechless. He picked up the phone and called Social Security. He sat on hold for nearly 2 hours, and the agent on the line eventually told him, "Sir, this determination is based on your 2024 tax return. Unfortunately, there is nothing that can be done." But here is the part of the story that truly saddens me. That agent was mistaken, or at the very least, was not sharing the complete picture with Robert, because Robert had retired during 2024. He had stopped earning his regular paycheck, and according to official Social Security policy, work stoppage, is recognized as one of the qualifying life-changing events that permits a retiree to submit Form SSA 44 and request that their IRMAA charge be reduced or completely removed. Robert simply did not know. No one had informed him. And by the time he eventually learned about this option, he had already paid thousands of extra dollars in Medicare premiums that he was not legally required to pay. Please, do not let Robert's situation become your situation. Allow me to show you precisely what the official rules actually state. Let me carefully walk you through the actual figures, taken directly from the government's own published documents. To begin, the Social Security COLA. On the date of October 24th, 2025, the Social Security Administration formally announced a 2.8% cost of living adjustment, taking effect with benefit payments beginning in January 2026. Close to 71 million Americans benefit from this annual adjustment. So far, that all sounds reasonable. But this is where things become troubling. Medicare.gov has officially verified that the standard Medicare Part B monthly premium for 2026 has been set at $202.90. That figure is up from $185 the previous year, a jump of $17.90 every single month. That is nearly a 10% increase, and unfortunately, the news does not end there. The yearly Part B deductible climbed to $283 for 2026. That represents a more than 10% rise from the $257 figure of the prior year. What that means in practice is that before Medicare contributes even $1 toward most of your physician appointments or outpatient procedures, you must first pay that full $283 out of your own pocket. Now let's run the actual numbers in a way that genuinely matters to your household. The typical Social Security retirement benefit currently sits at around $2,015 per month. A 2.8% boost on that figure comes out to approximately $56 of additional monthly income. However, Medicare has just clawed back $17.90 of that amount through the Part B premium adjustment. So what is your true raise? Closer to about $38 each month rather than the full $56. And keep in mind this calculation is before grocery prices, utility bills, and prescription costs continue climbing. Now I can already hear what some of you are wondering. Edward, what about that hold harmless rule? Shouldn't that be protecting me? Let me be straightforward with you. The hold harmless provision is a genuine, legitimate law. It is written directly into the Social Security Act, and it states that your net Social Security payment is not allowed to decrease from one year to the next as a result of a Part B premium hike. But here is the harsh reality. According to both AARP and the Social Security Administration, the hold harmless rule is anticipated to apply to fewer than 5% of Medicare beneficiaries during 2026, which means that 95% of the people viewing this video are not being shielded by it. The hold harmless rule will not protect you if any of the following situations apply to your circumstances. You owe IRMAA charges because of higher reported income. You are someone newly enrolling in Medicare during 2026. You pay your Part B premium directly rather than having it deducted from your Social Security payment. Or you are reviewing premiums tied to Part D or Medicare Advantage, because the hold harmless rule simply does not extend to those plans whatsoever. Now let me turn to IRMAA, which stands for the Income-Related Monthly Adjustment Amount. This is the very surcharge that blindsided Robert, and it is going to blindside hundreds of thousands of other retirees during this calendar year. For the year 2026, IRMAA charges begin if your modified adjusted gross income reported on your 2024 tax filing exceeded $109,000 for an individual filer or $218,000 for a married couple filing jointly. And here is the detail that most folks fail to realize. The highest IRMAA bracket for 2026 imposes a charge of $689.90 each month for Part B by itself. That works out to more than $8,200 every single year per individual, just covering Part B. On top of that, there is a completely separate IRMAA surcharge added to your Part D coverage. And according to research published by the Kaiser Family Foundation, 7 million Medicare beneficiaries are already devoting more than 10% of their entire household income just to cover Part B premiums. The 2026 premium increase is expected to push even more retirees into that financial bracket. But now here is the encouraging news, the part that almost nobody talks about. The Social Security Administration has an official document available. It is Form SSA 44. The full title reads Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form. And if you have gone through any of these qualifying life-changing events, you have the ability to submit this form to lower or even fully eliminate your IRMAA surcharge, getting married, going through a divorce, the passing of a spouse, work stoppage, which simply means retirement, a reduction in working hours, loss of property that produces income, loss of pension income, or receiving an employer settlement payment. Robert qualified under the work stoppage category. Most retirees actually do qualify, and yet hardly any of them ever take the step of submitting the form. So allow me to share the 3 precise actions you should be taking beginning today. Step 1. Verify your actual January 2026 deposit figure. Sign in to your My Social Security online account through ssa.gov or pull out your bank statement covering January. Compare the deposited figure to what you received in December of 2025. If the increase looks far smaller than you anticipated, or even worse, if the deposit shrank, you may be paying IRMAA. The Social Security Administration also sent every beneficiary a benefit verification letter during late 2025. Locate it. Review it carefully. It spells out exactly what Medicare is deducting from you. Step 2. If you discover IRMAA on your statement, submit Form SSA 44 without delay. You can download it for free at ssa.gov/forms/ssa-44.pdf. If you have retired, scaled back your hours, lost a spouse, gone through a divorce, or experienced any other qualifying life event since your 2024 tax year, you carry the legal right to request that Social Security use a more current year's income figures instead. Most retirees who submit this form do qualify, and you may file it at any point during the year. Please do not delay. Every month that passes is potential money you may never recover. Also keep in mind, you have only 60 days from receiving your IRMAA determination notice to submit a formal reconsideration request, so please act with urgency. Step 3. Reassess your Medicare coverage and look into available assistance programs. If finances feel stretched, reach out to your state health insurance assistance program, commonly referred to as SHIP. This service is free, neutral, and backed by federal funding. Ask them about Medicare savings programs, which may potentially cover your entire Part B premium if you meet income requirements. Inquire about Extra Help, a program that lowers your prescription medication costs. And do not forget, open enrollment runs from October 15th through December 7th every year. That stretch is your single opportunity to switch Medicare Advantage or Part D plans without facing a penalty. Hold on to copies of absolutely everything, every notice, every submitted form, every appeal. A documented paper trail will always serve you better than memory when navigating any federal agency. My friend, allow me to leave you with this final thought. The regulations that influence your Social Security, your Medicare coverage, your pension, your banking activity, and even the way you move through airport security. These regulations are shifting more rapidly than at any point before. And the federal government does not phone you personally. The Social Security office does not send out warnings. Medicare will not be mailing you a courtesy reminder when a fresh rule could quietly cost you thousands. You must stay informed on your own, and you cannot count on YouTube by itself to deliver these alerts to you in a timely manner. YouTube notifications are inconsistent. The platform's system decides who gets to see what content, and many of you end up missing the videos that matter the most. So here is what I would like you to do right now before you click away from this video. Tap the link located in the description beneath this video and become a member of our Global Senior Alerts official WhatsApp channel. Once you join, you will receive your complimentary copy of the Senior Benefits Protection Guide, a thorough plain language handbook addressing Social Security, Medicare, pensions, banking withdrawal regulations, insurance claim rights, and travel rules for senior travelers. And the very moment any fresh rule, deadline, or government notice is released, we will deliver it straight to your mobile device in real time. No algorithm filtering, no delays in delivery, simply the facts brought directly to you. If this video brought you any value today, please do me one small favor. Pass it along to another senior somewhere in your life, a spouse, a neighbor next door, a brother or sister, because somewhere out there is another Margaret, another Robert, sitting at their own kitchen table puzzling over where their raise disappeared to. Your simple share could rescue them from losing thousands. I am Edward. Stay informed, stay protected, and I will be seeing you in the next alert.